Condo appraisals are low. 9 condo buildings or projects have been canceled in Toronto. All this and more with a good friend and mortgage broker, Mr. Dion Beg, right after this. Here we are, my friends, back with our favorite mortgage broker and all of the land, Mr. Dion Beg. How you doing, my man?
I'm good, man. I was jumping up and down the other day as all the kids went back to school.
Yes.
You know, try freedom for all of us. It's been nice to have them. It's also nice to see them back in school.
Back in school, that's right. Where they should be learning and everything else. Yeah, it is fun to have, family around and my kids, one flew across the country and the other 2 went back to school. It's just nice to have a little bit of, I don't know.
Silence in the house in the middle of the day, yes.
Yeah, that's it. That's it. And September rolls around, my friends, and as with every September, just a little bit more interest into our local real estate markets. Are you seeing the same, Dion?
Yeah, you know what? This week, I don't know what happened. It's the phone is ringing like crazy. People are out there buying. Lots of buyers are out there. That's what I've noticed in the last week.
Yeah. We should be careful how we use lots of buyers. There was just more than there are or were in August.
True.
Time will tell if it's lots and lots and lots. But I still, I think there was an underlying tone with cautious optimism among many in our industry, Dion, that those buyers would come back, and we're just seeing a little bump. Right? And time will tell.
Yeah, it's always hard to measure during school holiday time, right? You can't really use that as any sort of certain signs. But what are you seeing on your side?
We're seeing, we're about to launch a listing for next week, which obviously includes some buyers and that sort of thing. So when you list a home, typically you want to go buy a home, and it'll be interesting to see how it unfolds because they're downsizing, and we'll see where that lands in the market and the appetite for their type of property as well, because we know when people typically downsize, they're downsizing from a bigger home or a higher priced home, and we'll see where that lands. Helping to set expectations. That's what both you and I do with our clients, and understanding, hey, it may not be a 2-week sale. It could be 4 or 5 months. And that's what we're setting them up for, just to have that that understanding of the market. I'm sure you're doing the same with your clients.
Yeah, we are. And when we run these numbers from a client who is selling an owner-occupied home to buy another one, we always use the worst-case scenario, meaning imagine you sell for less than you expect. Imagine you have to pay more than you expect. And then we run those numbers. And then hopefully the numbers are better, but that's the way you should prepare for a transition like that one.
Absolutely. And here's some of the other news, as we've kind of alluded to. The month of August, as always, is one of the lowest months of sales through our calendar year, next to maybe a January or February type thing. And the numbers just came out on the Toronto Real Estate Board, and they are up. And you're seeing a lot of posts and colleagues say, "Hey, numbers are up. Sales are higher than they were last year." Let's peel that onion away. Let's look at what that really, really means. And here, I'm going to share my screen. Let's just flip this over here so I have the right screen. And this is right off the Toronto Real Estate Board Market Watch overview. And the dark blue, that's August 25 on the Toronto Real Estate Board, all property types, 5,211 homes sold. Yes, that is up from last year at 5,092, up 2.3%.
2%. Okay, so look, something's better than nothing. That's the first thing I'll say. But yes, maybe it's nothing to write home about quite yet.
That's right. And I should have scrolled down here. Oh, average selling price, just off the top of my head, down from last year. And 5% is more of a significant number than nothing.
Yeah, right. And I think, those two things match, meaning maybe sellers are finally accepting that they're going to have to move a little bit on price in order to move their property. So that's what that indicates there. So that makes sense to me. They match up.
That does check out. And we'll probably see that number, I feel, for the month of September, year over year. It might be down because our numbers last September were a little bit higher as well. in alignment with our August 24 numbers. For August 25, we're probably, if you look at that number in a month from now, what's the average selling price? We're seeing $1,022,000. I feel it's probably going to be about that same number, Dion, for the month of September. So month to
Maybe we
month,
should check in and see it.
yeah, month to month, we're probably on par. Year over year, don't be surprised to see that number down year over year, but month to month, we're probably going to be on par. Okay, let's go back and let's provide a little bit of clarity on our year over year comparison. And I went and did some research here, and these are the last 10 years or so. Every August, how many homes sold every August? And this is all property types right from the Toronto Real Estate Board. And you can see for the last few years, we've been in the 5,000 range, we'll call it. Of course, we all remember 2020, double that just about. And then our monthly average number you can see on screen there is just shy of 7,200 homes per month. And I did some more math. I took out 2020 just to see what that would be, because that's, I should have done the median as opposed to the average. And that brought it down to about 6,800 homes every August.
Right.
Do you remember what happened in 2017 to have that number drop from 97? That's a big
I think this was the whole foreign buyers rush. Is that right?
You're on the right track. The Fair Housing Program was introduced by the Ontario government, which included foreign buyer tax and a number of other things that they implemented. And I don't know if you recall, they implemented them. I don't remember the exact month, but we'll call it June. And basically,
so there was a big rush in the previous year from foreigners to get in and buy and close before these taxes kicked in, right?
Exactly. And when they introduced these dramatic changes, if you will, the market had already responded to, we are overpriced, and it had already started slowing down. And then the government had all this intervention. The point of this slide is look at things from a bigger picture. Sales are up year over year from 24 to 25, but just know we've got a little bit of work to do to get up to that 6,800, 7,000 homes sold every August. And we'll check in on, maybe we'll do the exact same thing here for the month of September, just to get some clarity around that, Dion.
Yeah, and I think, with the way things are going with the sort of shutdown in immigration in Canada, I can't imagine that we're going to see massive surges in this number in the next year, maybe next 2 years. There might be a little bit of time when things sort of consolidate where they are.
Yeah, absolutely. Okay. You sent me a report that I subscribe to as well, and I'm going to bring that up. And my friends, let me just flip over my screen here again. And this is the monthly report. If you're actually, I believe anybody can subscribe to it. You don't have to be within the industry, but this is from Edge Realty Analytics. As you can see here, Ben Robideau puts this together on a monthly basis and does tremendous work right across Canada, and obviously highlights our major cities in the real estate spectrum. Also, doesn't just look at real estate. He looks at GDP growth and what's going on from that perspective and how it affects real estate. And you were reading this yesterday. You wanted to highlight a few things. So you walk me through this, and we'll have some discussion around it, Dion.
Yeah, sure. So jump to the pages we discussed earlier, I think.
Excellent. We're going to go down to page 8. Here we go. Hang on a second. Page 8. Sorry for the fast scrolling. And
it'll be worth it.
This is excellent information, and for those that love this type of readings, and you wanted to land here on the Canadian exports.
Yeah, so if anybody's questioning what is the impact of these tariffs or potential tariffs in terms of the impact on Canadian exports, well, take a look at that. We are, looks like 28% down in the last quarter, or last 1 or 2 quarters of this year. So if you are working in an industry which is impacted because of this, I can imagine that things are a little bit scary. You and I have spoken, Gary, about some of my clients who work in the automotive industry who have been concerned about their positions because of this type of stuff. And I have anecdotally seen some other clients who work in this type of trade also effectively get downsized because the the work is not there or the revenue is not there to support their positions. So this is a real concern. I mean, and this translates to, and it's not quite here in today's graphs here, but the last 2 months, we've had real job losses in Canada that total over 100,000. I can't remember the last time we've had 2 consecutive months of job losses outside of, say, COVID. And all that, leads to more negative news.
Yeah, yeah. And I know I have some colleagues, some friends that are in the automotive industry in Southern Ontario, and of course they have. They are in an interesting situation as they are trying to move product back and forth over the border for the manufacturing of vehicles and that type of thing, and it is definitely having a major impact in that industry, and we're going to continue to watch what that automobile industry looks like. Okay, next one is our GDP, and walk us through this, Dion. I'm going to make this a little bit bigger just for our friends on that can see it with a little bit more clarity there.
Yeah, so that red line is Canada, blue line is USA, and it basically shows GDP per capita. Now, the thing you see the government pushing in all of their GDP statistics is top line GDP of the country. But once you take that GDP and you divide it by the number of people in the country, what you'll find is that basically Canada has had zero real growth in GDP per capita for for the last 10 years. Okay. Whereas the USA has had real GDP growth per capita in that same period of time. Now you might be asking, well, hang on, how is it that our GDP grew, but our GDP per capita didn't? Well, many people will tell you that the way that Canada saved itself in the last couple of years was by importing the GDP, that is, by allowing immigration to grow. And of course, if there's more people in the country who all need to buy a loaf of bread, then that means that there's more activity for the bread factory. Therefore, the top line number grows. But when you divide that by the number of people in the country, it doesn't quite work out that way. So this is why the US economy has been doing better than Canada for the last decade now. And, this is also why when you look at the USA, they've held out on their interest rate cuts much longer than we have, right? Because they've had employment, at least up until recently, because they recently also had a negative job growth month as well. But this sort of explains in a very simple graph that the USA is more productive than Canada.
And by no means am I an economist, and I'd say if we were looking at this chart again in a year from now, not only will Canada's GDP be down, but I feel the U.S. will, for the first time, since that COVID year, will be down too, just based on that tariff conversation that we were just having, and of course other factors there. These next 12 months will be certainly interesting from that lens, that perspective. Okay,
yeah, I'll just say, like, the graphs we're looking at here, Gary, relate to mostly Canada, but I imagine that you and I just looked at that trade graph where the exports are down for Canada. I almost bet that it's similar in the USA. I'm sure there's people in the USA who have export businesses who are really impacted right now because the world doesn't want to buy stuff from the USA.
Exactly. We're seeing that and we're feeling that. And maybe you've taken part in that. Okay, let's go down to the next one here. And that we're going to page 12. And let me just make this a little bit smaller so we can see all the charts there. And you wanted to look at the monthly home sales.
Yeah, I think we've already kind of looked at this, Gary, in your purple graph earlier, which is just showing the year over year August home sales. So we can probably skip this one.
Fair enough. Okay. Down to page 17. Again, apologize for the quick scrolling. Blink, and then it'll be there. Page 17. Now, this is going to start a different conversation in relation to new builds and new construction and a slowdown there or a transition. And walk us through this.
Yeah, you want to just zoom in on that one a bit there, Gary? So,
yeah, of course.
What we have here, guys, 3 lines, gray, blue, and orange. That gray line is the construction of new condominiums in Toronto since, what do we got here, 1990. The blue line is single-family homes, and the orange line is rentals. And what you'll see is a dramatic decline in condo construction in the last few years. And I think, in fact, are you able to flick to that article, Gary? Is that?
Yeah, of course. Yeah. So this is an article Yeah, go ahead. Or Dean, let me set it up. This is an article, obviously, as you can see, from CBC, and just posted September 11th. Today, in fact, 9 condo projects canceled this year, and looks like that trend will continue. And you can go ahead and read this
Yeah,
article
so
yourself.
guys, back in 2020, 2021, you probably remember those images of people lining up outside of those condo buildings, camping out overnight in order to be able to buy a condo. And everybody there in that line were speculators who were hoping that, the property would go up in value by the time that it closed. Markets turned. Those properties are not worth what they were even when they bought them. And so there has been a massive turn in sentiment regarding purchasing of new construction condos. And because of that, we've got a bunch of builders out there who can't even sell their existing stock. Now, if you're a builder and you can't sell your existing stock, why would you start constructing a brand new hundreds of millions of dollars cost of a building when you can't get the pre-sales that you need? So, this headline is 9 canceled, but I think that's on the back of 11 canceled last year. Gary, is that what you read? And so what's happening here, guys, is builders aren't building condos because the market has spoken. The market doesn't want condos right now. That's probably going to lead to an interesting issue in about 5 years from now. There's lots of stats that say in 5 years from now, we're probably going to have a condo shortage, which is funny to think of right now. But let's check in 5 years and see how that is. But you want to jump back to that slide, Gary. So we can see that that chart with the condos dropping off. The blue line, which is the single family homes, also dropping off. What is growing is the construction of that orange line, which is the construction of purpose-built rental property. So the tide has changed so much that builders are saying, I'm building stuff or I have plans approved for certain things, and I've got to switch. I'm going to stop construction of condos. I'm going to rework my plans for that development site, and I'm going to build purpose-built rental. Okay. So that is what is happening now. And I mean, if you want to get sort of diabolical here, it's almost a sign that what the market wants now is rental property, because maybe many people have given up on the idea of owning a property, which I can understand. You and I have spoken about this at length with affordability issues. And, I've got friends who live in Europe. I've friends who live in Switzerland. And when I visited them, they couldn't list one of their friends who owned a property. Everybody rents in those countries. Now, I know we're not quite there, okay? But it feels like we may be going in that direction if everybody under the age of 30 is likely not going to get their foot on the property ladder and just be renters, right? So, and again, there's solutions around that. Gary and I both help families who are helping their younger family members buy. But for those who aren't in as such a fortunate position, then yeah, this rental stock is probably where they may be living for the next 30 years of their life.
Yeah, every few years we'll see the trends move back and forth, but this is kind of a significant one, because as you can see for basically since the early mid 90s there, as you can see on the chart, condos or ownership style properties have always outpaced the rental builds. And that's why for many years it was called upon, even people, I say small investors like you and I, to go buy and invest in investment properties so they can provide rental housing. And now we're seeing that shift, or have seen that shift, to the major developers now providing rental housing. So it'll be interesting of what that impact has on, smaller investors like you and I and our colleagues and our clients as well, and how that affects the rental rates and things. So we'll keep an eye on that. Dion, I want to circle back to the condo conversation and in appraisals, because just off camera you mentioned something that was really interesting to me. And often when we don't always, when we go purchase a property, or we have a contract signed, an agreement to purchase and sale, then we go get financing on that. You provided some really good clarity on the price per square foot and how appraisals are coming in.
Yeah, so I'll give you an example. Just a couple of days ago, I spoke with a client. First time he called me. I think, in fact, Gary, he might have seen you and me talking on one of these YouTube videos. And he said, Dion, I purchased a property a couple of years ago, pre-construction condo, $1.4 million. And the first question I ask when I hear that number is, what's the square footage? And the reason I ask that is because I've noticed a certain acceptable number, depending on the location of the condo, a certain acceptable number of square footage or cost per square footage that appraisers are bringing those numbers in at. Okay. So for him, when we did the math, it was something like 900 square feet. And therefore, he had paid around $1,450 per square foot for that property. And I did a quick search on other recent mortgages that we'd funded in that neighborhood, and looked at the appraisals on those other types of properties that are, again, similar neighborhood, and they were coming in at about 1,150 to 1,200 per square foot. So we had to have a conversation. And in fact, before he called me, he knew that he had overpaid. He knew that the appraisal was going to come in short. So his question was, Dion, how much extra down payment am I going to need to put into this deal? Fortunately, he had the funds, but in his case, it was something like 200 or 300 grand extra down payment required because of what we anticipate that appraisal to come in at. And, sometimes I don't know what that appraisal will come in at, but if I have a fairly good idea, I'm going to tell the client straight up, there's no point in waiting 3 weeks until we get the report in our hands. Let's have a conversation about what we have to do, in terms of getting this extra down payment. Now, that conversation was just a couple of days ago. In the same time frame, I've got an appraisal for another client. He basically paid $950 a square foot, and I said to him, "We're probably going to be okay." And thankfully, it did come in at $950 a square foot on the actual appraisal report. So, really depends on what you paid, where it is located, and the other thing, Gary, it depends on how desperate your neighbors have been in the last year. And what I mean by that is, has there been a desperate seller in the building next door who bought 3 pre-constructions and then just dumped them on the market straight away? Because when that happens, that immediately impacts the value of your property. And again, it's maybe one individual in a really desperate situation, but that then sets the new market average, right? Which appraisers have to go from.
Yeah. And this is why having these early conversations with people like Dion, and especially Dion and his team, are incredibly important. So you have that expectation when that closing date comes, what that expectation is, and obviously what the outcome is. Goodness knows we don't love surprises on closing day, but they do happen, don't they?
Yeah, I mean, and the tricky thing about these appraisals, these builders, they drop the closing date like 2 weeks before closing.
Yeah.
So we have to do a lot of this work early. Sometimes it's even hard to get into the buildings because they're in construction and whatever, get the appraisals done. But yeah, if you've got a pre-construction, do not wait until well beyond your occupancy. Talk to us at the time of occupancy. Because if you're near occupancy, your closing date is going to be in the next couple of months, and we need to start talking now.
Yeah, good stuff. Okay, just before we sign off, I do have a question around financing and appraisals. At what percentage of the mortgages that you're dealing with, or maybe it's all of them, Dion, just to help our clients, when I go purchase a new home, am I expecting to do an appraisal as well, or pay for an appraisal as well?
Okay, so that's a great question. So it depends on a couple of factors. I'll start with down payment. Okay, so it surprises a lot of people that if you're putting down less than 20%, which is an insured mortgage, you would think that would probably require an appraisal because you're borrowing so much of a percentage of the property, right? But in fact, in most cases, when you're buying getting an insured mortgage, you do not actually need to get an appraisal done. And I'm guessing that at the CMHC level, they've made an executive decision that the cost of an appraisal versus the potential downside of the person paying too much for a property is not worth the time and money involved in getting appraisals done. And so, that's the funny thing. If you're putting less than 20% down, probably there won't be an appraisal unless there's a red flag on the building, like there's something in the MLS listing that says renovator's dream. Then they're going to probably want to send an appraiser to the property. If you're putting down exactly 20%, in most cases, an appraisal will be required. Okay, this is the threshold where it's no longer an insured mortgage. Therefore, the insurer doesn't take the risk. The bank who's lending you the money takes the risk. They're going to want to check the value of that asset. And 9 times out of 10, there will be an appraisal requirement. Then if we get to say 65% loan, that means you're putting down 35%. We found that as another interesting threshold where lenders may not require an appraisal. Okay, so that's the bank saying, you know what, at that loan to value, we're probably okay. Again, there's no guarantees here, it's 50-50. But if you're under 65% loan to value, then you probably don't need an appraisal.
There you have it, my friends. As always, great insight, Dion. Remind us how to get a hold of you.
Yeah, kangamortgage.ca or Instagram at the Dion Beg.
There you have it, my friends. That's Dion Beg. Of course, I'm Gary McGowan. We'll see everybody in the next episode. Goodbye for now.